Hey guys, my name is James Mason. In this video, I'm going to explain to you what a reverse split is and why a company would perform this. So, unlike in the other video where I talked about the authorized shares, outstanding shares, and the float, when a company decides to do a reverse split, this will actually cancel out those shares that they have on the market, and they will consolidate them and give you less after they restructure their shares. So, for example, if you have 100,000 shares and the company decides to do a 1-for-100 reverse split, they would take your 100,000 shares and they would divide it by 100. In the end, they would give you 1,000 shares of their new share structure. So if you happen to get caught up in a reverse split or see a stock that just appeared to gain in price, it's not that that stock became more valuable as a company. They just consolidated so many shares together, and that's what made the price greater. So the reason why a company would normally do this is to prevent them from being delisted from an exchange. So for a lot of the exchanges, the minimum is $1. If that stock falls below $1, it will get delisted, and that will be less investors that will see their company on those exchanges for them to actually sell stocks and raise capital. Another reason why they might do a reverse split is to pull away from the image of being labeled a penny stock company. So if they were able to do a reverse split and increase their price per share to where it could stay over $1 and stay or get listed on the bigger stock exchanges, that draws more positive attention to them as a company on the surface. Now, it sucks for you if you were holding on to that stock and it went through that reverse split, because a lot of times a company will try to do a reverse split. In the end, you'll end up with less shares, and it ends up selling off, and so now your loss is greater. So I always like to caution people that when they find out their company that they're invested in is talking about doing a reverse split, to start paying attention, and they need to come up with a plan on how either they will handle it, as in if they accept to stay in for this reverse split, or to either cut their gains or losses and get out before that reverse split, and maybe take a look at it after they restructure their shares. So I hope this video explains it to where you can understand it a little bit easier. And if you like this video, please give it a thumbs up. If you haven't subscribed yet, please subscribe to my channel. I would really appreciate it. And I will see you in the next one.